Yo, what is up? Today, the market does not have a case of the Mondays. Let's go. Yeah, ready to roll. All right. Love it. Love it. Oh, man, you guys are already hot and heavy with the comments. Man, so welcome. If you're new here, I may or may not have somebody joining us. We'll see. Markets in kind of a rally mode this morning. So that's nice to see, actually, and I think it may continue. But anyways, so if you're new to the stream, welcome. By the way, we're on Twitter. I can't really see what's going on over there, so sorry if you're commenting there. Looks like love it, cool. Just oh, I gotta unpin the old one, and we will pin the new one. Pin. Cool. All right, so we're live. Every Monday we kind of do this. I try to do this around the lunch hour when we don't have a whole lot happening. I got a couple screens in front of me, so hopefully we're not in the middle of crazy trades. Although I will say we had usually Monday is like my worst day of the week, but this Monday, by the way, was not. So far, I'm I'm 3 for 3 and a couple multi-hundy percenters. So I'm happy so far, super happy. But that said, what's up, day trader? I don't know how to get rid of this. I'm gonna have to go into settings or something and figure out how to edit some of this design thing. They the restream that we use had like what is it? Like spooky kind of let's see if that changes. We're back to normal. All right, ready? Yes. Okay, so here's where we are. Every Monday. Oh, Sharky's asking for a link. Let's give him the link. There he goes. Might have Sharky come in. Every Monday, we kind of just look at the market. So we have our first really quick, like Monday morning session. Looks like it may carry on, but it was a good Monday morning. And then we hit the lunch hour, and that's when the real planning starts, right? So Monday morning, I really don't put a whole lot of, context into the AM trades, but sometimes they're nice, right? And from here on, we're basically going to plan out the rest of the week. I'm going to look at some of the major headlines that we got last weekend and over the week, and then what we have moving forward. So what do we need to watch out for? Some of those things I have on the screen. The bond auctions shut the freaking door. If you didn't hear, Powell dropped the F-bomb live on the session. I mean, just I mean, never heard that before. Didn't think I'd ever hear that, but we did. And I did want to talk about the bond auction situation just a little bit, right? So last week, I mentioned that Powell had said they're going to stop offering so many bonds and stop kind of like adding liquidity to the market, if you will. And some of the comments that I had last week was really about, the interest rates are going to become a problem. They're a problem now. And I think that's why we're seeing some of what we're seeing, right? So like as the Fed issues more and more bonds, that's essentially debt. I see Sharky coming in too. What's up, Sharky? I put you live right away. But as the government issues more and more debt, specifically at a higher yield, well, what has to happen, right? The deficit continues to get bigger and bigger and bigger, and we're kind of, Jay Powell, absolutely living legend now, right? Like that was a huge, huge moment. One we probably won't ever see again. But yeah, it was hilarious nonetheless. And the thing about the bonds right now is, with the over 5% yield, the government's interest rate payments essentially are going to, I think I read a headline, they're going to outpace our military budget, which is like blows my mind, right? So that's where, if we continue to go higher, and we stay over 5% or whatever, that's when things may start to break, and that's why we're seeing such a focus on some of these bond auctions. But we'll go ahead, move into it here, and we'll show you what the effect of that is. We'll actually be able to see specifically on the charts what happens when we have good or bad bond auctions. But overall, last week's economic data, aside from the multitude of Fed speeches and some of that stuff, I think really some of the headlines or highlights I was pulling out of it was a lot of the consumer debt numbers. And so July through September, credit card debt rose to like 1.8 trillion, which is pretty heavy, right? And I think when we talked about what some of the turning points in the market were from a fundamental perspective, over the last couple of weeks, I kept highlighting this. It was like a 4.8 GDP print that was just way through the roof, way beyond any expectations that the market had had. And I do think that that's going to get revised significantly lower, especially since some of the data that the Fed uses is really like lagging data. But the active data, I mean, is still showing, look, the consumer debt is getting pretty heavy, right? It's not so much business debt, but consumer debt so far, right? Credit card balance experienced a large jump Q3, consistent with strong spending. That's adding to that GDP. So the more that we spend, and we're going to look at retail sales, which I believe we get this week again, the more that we spend, the higher that GDP number is. But the higher the GDP is, the higher inflation goes. And Powell's real comment like last week was this guy right here, not confident the Fed has done enough to bring inflation down. And at that point, once he said that, then the market continued to sell off. We had a 30-year bond auction that same day, which initiated some of that sell-off. When we don't have a good bond auction, meaning, there's not enough buyers. We've been flooding the market with this bond liquidity for so long. It's getting to a point where who's left to continue to buy, and that's really part of the problem that we're seeing, right? Some of the other comments, so delinquencies are up. That's average credit card APR. Get this, Sharky, the average credit card APR is at a new record, over 20%. Like, if you're holding a credit card balance and let's say if you didn't learn how to manage credit debt when you're young, and we may be looking at some of this younger I guess we would be maybe in the younger generation that are getting up there. So maybe some of our peers are holding credit card debt and not paying off the full balance, maybe thinking that they could pay minimum payments. And I mean, just so you guys know, the minimum payment is like designed so that you'll never get out of debt. It's rough, but 20% average APR and credit card that's wild, right? So maybe American Express, Visa, MasterCard, those charts might be looking okay, assuming that we don't have like major charge-offs. But anyways, delinquencies are up. Some of the other like Fed speeches, commentary, some highlights, right? So Fed Barkin still not seeing full effect of the rate hikes. So kind of lagging policy. Bostic saying policy is likely sufficiently restrictive. And then again, Powell coming in at the end of the week. He's not confident that Fed has necessarily done enough to bring down inflation. And I think he kind of needed to say that, right? He needed to kind of backtrack what he had said the week prior. Just as an aside, there was another, it's probably not a nothing burger headline, trucking recession, volumes down. Yellow was another company, shipping company, filing for bankruptcy officially. And here's the like economic recap, right? So total household debt, this is what we were talking about, 17.29 trillion, prior 17.06 trillion, so slightly higher, slowly climbing. This is the stuff that we want to start watching, right? Why I'm highlighting now is because it may not be part of the narrative today, but it will be moving forward, just like how we're highlighting the GDP at 4.8 a few weeks ago, right? Not necessarily part of the narrative that day, but it is and will be continuing moving forward, right? Same thing with the debt, like the bond issuance being, the yield so high, not necessarily a huge part of the narrative today, but it will be, if not, is starting to become a significant part of that market narrative, if you will. So just things, always know if you're bullish, that's fine, right? Just be aware of what a good Sharky, how do you say it? A good bull always knows where the bears are going to step in,
Right.
right?
Yeah.
A good bear always knows where the bulls are going to step in and what they're thinking. Be open-minded. Always try to like think of like, okay, if I'm long, what would someone who's short be looking for right now? Right. That's what we're looking for. Right. Initial jobless claims. So jobless claims not typically a market moving event. Right. They don't really become market moving until we see something like a 300,000 number. But it is notable, right? They're slowly starting to creep up. So continuing claims 1834 versus 1812, slightly higher. Consumer sentiment was probably the last thing that moved the markets last week. That was Friday, coming in at 60.4 versus 63.8. But that was most of it. I think moving forward, unless Sharky, you have a headline that you want to hit?
No,
Talk about the
I
credit.
didn't see anything. I didn't see anything.
We didn't talk about the Moody's downgrade.
Oh, okay.
So that's a big one. I think if you were bared up over the weekend because of Friday, we did have a Moody's downgrade. Sorry, I didn't even put it up here. Moody's is one of the agencies. We had a downgrade not too long ago.
Right. The Fitch one, was the really the catalyst that took us,
Yeah, yeah,
down
and
during.
and I think that's gonna, the market is obviously not reacting to that. I don't believe that the market will react to that, to be fair, right? I think that is something where, you know, it was kind of like baked in, if you will. It wasn't an actual downgrade; it was a forecast downgrade. I think it
Right.
was. But it's about the government shutdown, right? We just talked about how much debt we're issuing via the bond auctions and what it's going to start costing us to service that debt, i.e., our interest rate payments as a government. And in the meantime, we're like playing this political, I don't know what to call it, shenanigans in the background of like, does the government shut down or not? And that government shutting down is really the main factor here because we couldn't get a solid speaker. And we couldn't have a state, like if we don't have someone in charge of the House and the Senate and everybody kind of in line, then the government shuts down. And what happens when the government shuts down is they don't process payments, things like that. So that is the risk of missing an interest rate payment. And therefore, our inability, our inability to keep a solid footing in the political landscape is leading to really these downgrades. And I think, commentary prior, it's kind of like an old story, right? Like, we may actually get the downgrade. Who knows where the market will be when and if that happens, but we'll see, right? Moving forward. Oops. Sorry. Moving forward. So today we got consumer inflation expectations. Tomorrow is the big day of the week, right? Sharky and I are all prepped, ready to roll for tomorrow. Today is not the day
Yeah.
that I
Yeah.
was expecting any kind of major breakout, right? Or breakdown. But what I would say is last week we talked about the market being the market, markets are either resting or they're running. Last week, the market rests. It had a nice rest. It really didn't move very much at all. The week before, it was a big run, right? So this week, I will say, and I know Sharky's on the same page, we're looking like there is a real possibility that we have some serious moves this week. And if we do break this range, it's going to come Tuesday on that CPI number, right? Either break out or break down from where we are right now. Not to diminish the PPI number or retail sales. That is a factor on Wednesday. So just to note, and then Thursday we have jobless claims, and we have some more Fed speeches Thursday and Friday. It's basically housing stats, rig counts. But yeah, the day of the week this week, the big day to watch is going to be Tuesday, and it is going to be that CPI number that will make or break the entire week. So, if you're going to trade one day, make it Tuesday. That's all I can say. If it's a big move, if it's a big move, I'll say, Wednesday, Thursday, Friday, not a lot of moving points. So maybe Wednesday we have a little bit of follow through, but this sets up for, it sets up for some of these days after Tuesday to be a rest day. So just keep in mind, That's what's on deck. So I'm going to take a look at earnings. We've had most of the Dow 30 components report so far. We actually get a little bit of a rest this week. We do have like 1,000 companies reporting earnings nonetheless. But 22 out of 25 so far, Dow 30 components have reported, and 25 Dow components have reported so far. 22 of them have beat expectations, with the exception of Boeing, Travelers, and looks like Chevron. And by the way, oil's been not looking the greatest so far either, which today I was looking at the oil chart. Looks like it's a little bouncy. And we'll go over a couple of the trades from last week that we highlighted too. But really quick, you got any earnings you're looking forward to? Sharky? Nothing yet.
Sorry, I was muted. I didn't realize.
That's all good.
Yeah, like you said, most of the big names have
Yeah.
reported. I think it'll be interesting to see how Target does, just considering maybe as a little bit of a temperature of. I'm sorry.
Yeah.
Let me,
Did you see my story about Target on my timeline?
No, I didn't see it.
I'm going to tell you guys a story. I don't know about Target this week. No real opinions. I'm going to share my experience, right? So I have Paper Juniors on the way, coming in hot and heavy, right?
Oh,
Not
boy.
next month. And we had recently like a baby shower, and Mrs. Gaines got a couple gift cards to Target not too long ago. And one was like a $500 gift card to Target. We went to go use it, or she went to go use it.
Did you get one thing of diapers?
Yeah.
Just one. No, just one diaper. For $500.
The gift card was emptied. And we're like, what? And so you can check your transactions, and it looks like it was used in New York. We live in California. And so we're like, oh, that sucks. So call the number on the back of the gift card, and they were just like not surprised. And they're like, yeah, okay, we're just going to issue you a new one. And it came like right away. But I was expecting a little bit more of a battle on that. So that was a little shocking initially. But super happy to get a replacement.
I appreciate the gift card.
Yeah, we got a replacement right away. I mean, like less than a week after calling them. And so we had 2 gift cards. The second one's for a couple $100, and went to go use that, thinking like, oh, no big deal. The first one's a fluke, right? Wrong. So the second one was also emptied. And I was with her this time when we went to Target, and the cashier reaction was like, it really scary. So the cashier was like, not surprised whatsoever. And she's like, yeah, just call the number on the back of the card. They'll give you a new one. I'm like, yeah, we just did that. And she's like, yeah, they call the manager over. The manager's like, yeah, sorry. It's a Bay Area thing. And all of our gift cards got compromised. And we're hoping that it'll be over soon. And I'm thinking, oh my God! First of all, Bay Area spends a lot, right?
Amazon.
And then she went to explain like, oh, the old gift cards were this way, and the new gift cards aren't gonna be like that. So like the entire gift card thing that they had, like the way that the old gift cards were not secure, I guess. And then I posted something about it on my timeline, and Bzilla, if he's here, I don't know if he's on. It was like he actually commented, yeah, something happened. The same thing happened to his wife, and he's out in the Midwest. So I'm like, okay, well, that's not really a West Coast thing or Bay Area thing. That's a big thing. And then I searched a little bit, and our local newspaper is the Mercury News, and there was like, boom, first search result, Bay Area, like 3 people found guilty. Let me see if I have it. 3 people found guilty. Yeah. Here.
Wow.
Well, 3 Californians found guilty of laundering 2.5 million Target gift card scam. So I'm like, wow, that's crazy. I mean, gift card scam is not crazy. That's very normal. But that amount is a lot. And if that's just the one, I mean, it's funky. So what I'd say, what I'm thinking about Target, and this is just my thinking out loud.
Don't buy the gift cards.
Well, yeah, don't buy I don't know. If you have a gift card, load the balance onto your app. That's apparently the thing. But but maybe they have like a trade desk moment where it just, and a trade desk reported last week, and they basically threw the kitchen sink um, at basically threw out the kitchen sink, if that makes sense. And let me just look at it now. Yeah. And completely recover, well, trying to recover now, not fully recovered. But I think, that might have been like that dip buy opportunity. So my gut on target right now is that they flush. And then that like bottom falling out is probably that liquidity event. We'll
Yeah.
see.
I got
If they
two. I
throw it
got
out
two
like,
views on it. I mean, it's almost it's been ransacked since the whole the whole
it's bad.
controversy with the whatever it was. I forget exactly what it was.
Well,
It's
Target,
almost so bad
like,
that it's good, maybe kind of
maybe, yeah. So
situation. But
one thing to know, Target's history with security is not good. Would
But
not be
the other situation is, what I like to also kind of look at it for is maybe a little bit of a gauge also to say like, okay, you were kind of going over some of that consumer data, which
right.
is, a bit troubling, but it's also maybe a little bit of a grounds on deck view. Okay, how another way to look at how healthy the consumer, what's the spending like, how are they doing as a business, also kind
Yeah.
of linked
Yeah.
to a viewpoint of the consumer. Of course, it's not of course, not one-to-one. It's not perfect, but just, can possibly look at it from that point of view as well.
Yeah.
So we'll see. I'm not going to trade it for option. I did my one earnings lotto this season on Google. I'm done. I'm doing a one and done.
I'm done. Yeah.
So
Yeah. No,
I'm
I think,
good. I'm good for this one.
just as an aside too, there's a big difference between investing and trading, you guys. So like, if nothing's fundamentally changing with your company, there's no reason to sell it as an investment, right? Like that's the difference. My thinking here is like, look, typically you want to buy when it's really bad, or when it can't possibly get any worse. And if Target throws the kitchen sink out, I don't know how it could get any worse. So that might be a spot to step in and maybe get long, is what I was thinking. Side note too, I went to a TJ Maxx the other day because we're prepping everything. Oh my God, that place was like crazy busy. So I mean, that's an interesting one too. TJ Maxx is usually a pretty good retailer, but yeah, I wouldn't be surprised if they crush it. Walmart, yeah, I'm not thinking a big mover because it's again at all-time
But it'll
highs.
be interesting. We've got a lot of these retail. So
Yeah,
TJ
so
Maxx,
the whole sector,
Walmart,
retail sector,
Macy's, Target,
yeah,
Home Depot a
right,
little bit.
Ross, the whole thing,
So
right? Like, do we have Lowe's? So usually
BJ's.
you can get a pairs trade out of Lowe's off of Home Depot earnings, or vice versa. So we'll
Right.
see. That might be
Their
one we.
ATR is, it's just tough with those. I mean, what do they? You usually move what, 4%, 3% if you don't
Yeah,
hit the
we'll
market
look it up
maker
in the
move.
groups, right? Like if you're listening to us on Spaces, or if you're in the servers, then we'll look it up, right? And we'll have actual data. Pay safe, that's probably easy shorts. Yeah, I'm just looking at some of this stuff. Cisco is interesting. I actually like Cisco. I'm long Cisco, gambling.com. I
The
mean, but
legacy
anyways,
tech.
we're getting into retail. We're gonna be getting into a lot more, small cap stuff, and I think the small cap market might be in for a nice little ripper at some point in the next month or so. But we'll see. We'll see. Sharky, you got some sound effects here. I hear Miss
Oh,
Cleo
is
in the
it? Wait, is it
background.
time?
I think it's time.
All right.
The graphics team is working on something, but until we have that real transition, I'm pretty sure.
Oh,
Is
it'll
that
be
Miss
great
Cleo
to
in
have
the
a little
background?
transition. All right. Well, it's time. Let's get out our. I have
Yes,
my hat on. Let me get out my fortune telling hat. Hold on.
yes. I need a crystal ball or something.
Yeah. Hold on.
There she is. All right, so here's the segment of the show that we're gonna talk about our buddy Miss Cleo, our friend Miss Cleo. I don't know if we have a new name for him yet. I keep referring to him because technically, it's a him. If you didn't know, but here I'm gonna go ahead and read the this week's recap, and I'll try to make it so that you guys can see it. So here are the cards. So every week, Miss Cleo does a reading for us, a tarot reading. It's kind of a fun thing that we like to mess around with. Take it for what it is. We're not necessarily being serious to, trade off of it. But here's the reading for the week, right? So King of Wands, Page of Pentacles, Page of Wands. I don't know what some of these are, but we're gonna go ahead and read about it. So, Let's see. So the King of Wands, that is, they do crypto reading too. So there's sometimes reference that. But the King of Wands is the king of fire and impulse. He can also be called the Lizard King. Does he look like a lizard? The
Little,
Lizard
should
King.
we put on some doors?
Maybe, yeah. Expect wild price swings that are trendy in the sense that we spend most of the week oriented in the same direction. Well, if this morning is any cue, that's up, and I don't think we're going any further down than we are right now. We don't have any historical data where he's been a theme card, and that's what he's talking about. So the theme card is up here: Monday, Tuesday, Wednesday, Thursday, Friday. That's how this works. Where he's been a theme card, but he is positive as a daily card. Let's see how. Let's see if that trend will continue here. And then I just do a quick like my blurb. So Monday, I'll go into the cards here, but essentially she's saying reversion to the mean. Tuesday is intraday volatility. Wednesday, exhaustion / chop. Thursday seems to be a trend day per the cards. That is the Queen of Pentacles. All right. And then Friday, we've had this Friday, the Seven of Cups. This card used to come up all the time on a Monday, and it was always illusionary gains. And that's what it's a trendy day, but it doesn't hold. And that's what Miss Cleo's saying again for the week. So it's a busy week with back-to-back starts under the watch of the Fire King. Wednesday's choppy, Thursday's possibly weak, and Friday brings a rally to sell. Literally, Miss Cleo says Friday brings a rally to sell. So interesting. That's usually means
That didn't work last. Okay, well, that would be very interesting, and we'll see.
Yeah. Well,
The
that's a trendy week overall, right into resistance, maybe even a little bit higher then, and then a retracement. That's what that sounds like to me. So let's go ahead.
the
Where are we?
Pentacles is related to Earth, so usually
Is
that
it?
has to do with like money.
See, this is why I can't do this without you, right? I don't have that. I don't have the background.
There
So,
you go.
Monday, Page of
What
Pentacles.
if I'm Miss Cleo the whole time?
Yeah, maybe, right? So call attention to the fact both Page of Pentacles with Page of Wands. So this is again talking about the crypto stuff. Pages bring new starts, but the problem is that they lack the key energy to see it through. The Page of Coins is indicative of a new financial journey that likely fades near the close. Oh shit. So we'll see. As I type this, so I think, however, we may get a quick dip buy in the afternoon. So be ready for that. So dip buy this afternoon, which would be out now. Perhaps he can get us back to flat. So Tuesday, Page of Wands. It looks like we're going a journey, going from one journey to another, unable to find consistency in direction. Does that mean turnaround Tuesday?
Oh.
Ooh, I don't know. This page likely carries the energy of his king, which is the Lizard King, who may increase the power as a force multiplier, right? Expect rapid movements that trap and try to throw you out of your position. Okay. That's so this reminds me of like Friday and this morning. This morning I was ready for it. I only took longs this morning, but Friday
Nice.
I wasn't ready for it. I'll just say that, where we had this like base just maybe at or below pre-market lows, and it looked like we're going to break either way. And if you weren't able to flip long fast enough, you probably spent the majority of the day looking for a good entry or a nice pullback to enter long on, and it never came. Like it never really came Friday, and I don't think it really came today. They're very small pull. Oh yeah, it didn't come today. So it's very small pullbacks, but yeah, you'd have to be quick on your toes. So that
was tough Friday,
sense, right?
I was red.
Yeah. As I always say with wand cards, look for a trend to establish via higher lows or highs, and then follow the trend for the rest of the day. We will likely have a pivot near the close. Well, just as an aside, I don't think Miss Cleo is an active trader, at least not like professional trader. But you know what? We got your back because we are, right? Well, at least I'll just say this: we trade for a living. Wednesday, Two of Cups. We're running out of steam here, as this card tends to be suppressive of impulsive price, and it helps to calm things down. By the way, remember Tuesday we get CPI. This is our big day. So big energy day Tuesday. Wednesday, exhaustion, as this card tends to be suppressive of impulsive prices and helps to calm things down. So maybe Tuesday's the move. Wednesday, pause, right? Take the day off, especially because twos are low energy. it is flat historically, which makes sense for a Wednesday during OPEX week. Okay. I would I would just avoid the day and save your. She literally says take the day off. Okay. Thanks, Miss Cleo. Thursday, Queen of Pentacles. Both markets have received this card today, which means the energy will be very strong and obvious. Trend day Thursday. As with crypto, this queen is also negative with stocks. Oh, so I'm not hopeful for much upside here. Perhaps we have some news that leads us lower, only to stabilize in the afternoon after the euro close. I'm not a buyer here yet. Maybe pullback. Who knows? We'll see. You know what? Miss Cleo says in her little warning or whatever, what do you call it? Her disclaimer that she likes to call, she feels confident about the setups, whether it's a trend day or not necessarily to the direction. So I go with that, right? Friday, this is the card of illusionary gains, and we should all be familiar with it by now. There will be a wild rally that brings euphoria. It will attempt to sell off only to surge again. It will eventually retrace before the next move is made. Sometimes this takes a day or two before it is completed. You can probably buy Thursday's close and sell Friday's lunch. We may gap up, which I would. I think this is setting up like a normal week, right? Like statistically speaking, Thursday closes into Monday or Tuesday mornings have been like your most bullish times, right? Like that's when, if you're going to be a bull, that's really where you want to be looking. So that said, let's take this over the charts. All right, so I'm going to start out really quick on a 30-minute candlestick chart. What I have here is my daily view. I got the three majors: SPY, Qs, diamonds. DIA is diamonds, if you weren't aware. And then the redheaded stepchild on the far right, that is IWM. She does what she wants. On the bottom are kind of like my oscillators, or like confluent things I'm looking for, essentially for confluence, right? So Dixie, DXY, you can also use UUP for the dollar ETF. It's not going to be the same thing, but DXY is the main one that you want to look at. US 10Y is the 10-year yield. You can use TNX also is the 10-year yield, or if you'd like, you can use TLT. Whatever you have access to, those are going to give you the same kind of like barometers. TLT is the bond itself, not the yield, right? Inverse to the yield. So if bond is going down, then the yields are going up, which looks like we're having right now. We talked about a potential big trade in the commodity sector last week, and I was looking at, we were looking at this general area, and essentially this 22-day, 20-day like sideways pattern that we've had on gold. I was long gold, and that day that we broke down, below, I think it was like 183. Let's see, GLD, 183 on gold, 182.90. That triggered a stop, and it also triggered a short. So I actually, we may be able to get some continuation here.
Are you sure?
I don't know, right? So if the equity market goes up, then yeah, we're likely to get a little bit more continuation. This is just the commodity like ETF, so it's not like gold futures. But I will say, if we do continue to extend, there's a pretty big gap here that we could fill. That's down to like 173, and I'd be looking, to take either my short hedge is off around 175 and get long gold.
So you know what could be good to mention here for the viewers that may not know, how if we see strength in gold, how does the dollar usually react?
So that's one thing, right? So the dollar and gold and precious metals usually have an inverse relationship, right?
Right.
And I'm going to preface that one with, this time usually it's kind of decoupled a little bit, but typically, for sure, if you see the dollar falling, that's actually that's going to be bullish for a lot of things. It's bullish for historically, it's bullish for gold and silver. And it's also bullish short term for equities, believe it or not.
Right. Exactly. So, I was going to tie into that next, how those pairs all work.
Yeah, all of them, right? So
just for a little teaching thing, because I don't know, not that many people talk about the Dixie and the gold relationship. So
yeah. Well, this is historically, the gold and dollar has been like super high correlation, like as high as you can get. I would say it's when the dollar's up here at this level, just so you know, right? Like the level that we're talking about, we're talking, in all of 2000s, it's like usually down here. This is a weekly chart. When we're over like well over 100 and stuff like that, then, or if we're exceeding, way up here, look at this. When was the dollar that high? I don't know. But yeah, so at a certain point, you kind of lose that correlation. I think we're nearing some of that, but it's in this funky spot. So the dollar right now coming down is generally bullish for equities, and I think it would stall out for gold. I think that the relationship right now between gold and equities is like, when we had, like geopolitical concerns and things like that, it was a flight to safety, right? Flight to quality, you would say, into gold. The thing about gold is that there's no earnings, kind of like Bitcoin, right? Actually, I take that back. Bitcoin has earnings. There's no earnings in gold, so there's not like that other factor, the X factor. And if earnings are looking good, which they are right now, I would rather be in gold. So people might be selling out of some of their gold positions to get into equity. So that's why I think maybe it would be, if not like a pullback, but maybe just take a breath for a little bit and see where that goes. TLT also kind of rallied. I was thinking 93 would be like max where he hit, but it's a nice little pullback so far. I just don't think that we really go a whole lot of anywhere on the bond market, to be fair, right? It has not actually broken serious range, and it will not break range until it's like getting a weekly close over, I don't know, call it 88, 89 on TLT. So, I get a lot of questions about like, is TLT a good thing to buy and own right now? I don't know if you get the same questions, but my typical response is, look, if you have cash, you could just have it sit in cash in your brokerage and get paid on that right now, versus, going through. I think this is a trade right now on TLT. I don't know that it breaks out to like 130 or 150, if that makes sense. But anyways, let's take a quick look at the weekly charts. So this is SPY, right? And this is last week. So we're looking, when we said SPY did not really have a big move. So this is the last 7 days, not including today. This orange box is an average week's range for SPY, like SPY. We barely got like halfway through. Friday felt like a big day, but we kind of opened towards the lows and we immediately bounced right off of that. And I think this is a good, maybe like teachable moment for most of I didn't have the greatest day on Friday, right? I was looking at this spot. I have my NFP levels like 436. I'm thinking, okay, we're opening below and we retested. I actually entered short here and I'm looking for, my basic system here, opening range high, opening range low, pre-market low. So we got a break below that opening range low, and I was looking for this pre-market low at the very least, and then possibly a stretch to like 431, 430. And this is one of those where, like, look, even on a smaller 3-minute chart, if you didn't like, exit stage left right here, but up here, and I think you and I were both looking at this spot too, Sharky, where it's like, okay, this opening range, like high, coulda, shoulda been like entry. But if you were short down here and this big old giant green candle just jumped right in front of you, there's not really a whole lot that you can do on something like that. So just be aware, like this is the type of market that we're getting right now. We're, you can be short for a little bit, but over the last couple weeks, the trend to notice, has been like every dip has been bought right now. And what I didn't have on my chart was really this level here, right? We'll call it 434, right, which was the bottom of that consolidation, not the prior day, but Thursday low, and that's exactly where we bounced. And I could have flipped right here, and I thought about it for a second, but I didn't open it. And by the time I blinked, it was like poof, we're gone. I'm like, oh shit. So anyways, just be aware, always look at a couple of days and be super nimble, because we may have to move quickly, right? And so same thing this morning. This is just, pre-market lows. And it was this kind of setup where, here's the pre-market low for me, and, opening range low here, opening range high. This is how I set it up, by the way. Pre-market high. Oops. Pre-market highs here. And you guys will see where I'm like, well, maybe we just continue on. So we tagged that pre-market low and we held it. And we held it for like 20 minutes. And I think after that 20 minutes is when I actually stepped in somewhere on one of these candles when it was reclaiming that opening range low. And we just target here, target pre-market high, and look what's happening right now. So these levels will stay, prior day high. Yeah, I think we go higher. One thing that was very weird that I saw today, I don't know if you saw this too, Sharky, but these candles around the lunch hour, these wicks, we got 1, 2, 3, they were getting really wild. So 440, if we break through this level, that's going to be a pretty heavy continuation. And so I'm just going to measure this right now. So from today's open here, oh my goodness, Sharky, an average week's range, holy crap, takes us to 450.
Oh, okay.
Yeah.
I've got the weekly expected move up. I'll tell you right now. It's
a 14-day
$5 on SPY. $14.
14-day.
Oh, okay. You do 14-day
average. Yeah, 14-week average is what I usually use. Maybe, after last week, it might be a little bit smaller, but downside move to 428.70. That makes sense too.
I just have the weekly for this week, and I'll tell you what it is. It's about $5.65 to 70 cents in either direction for this week's expected move.
So that's what this is, right? So that like half right there, it's about $5 on both sides. So we can do, which we typically do, is like we'll actually get like a full week's range of the upside and downside sometimes. But here's what I say: 449.79, 75, major upside. If you're higher than that this week, don't expect much. I would expect a reversion somewhere back down there. But downside, if we get a reversal, 428, which would be a really nice retest, by the way. Just looking at this right here, and about I don't want to get too excited, but because every dip is being bought.
Did the audio go out?
No, You're good. I hear you. Yeah, that'd be a little bit less than a 50% retrace from that swing level, but right into a pretty clean support zone. So, for this week, what I'd say is like, here is what I have as my kind of like no trade zone, if you will. So between 438 and 436, you can really refine this down to this volume shelf. Is about 437 is your real key volume shelf right here. If we lose that level, then at that point in time, I could probably be looking for shorts, and I'd like to steer clear if it's below 436. Then I could be looking for shorts. But above this and down to that 437, I gotta say, man, I think this is a buyable dip if you get it. That'd be like, about 437, give or take. So let me just do. Yeah, and so this is a volume profile. So here, session profile. So here, major defensive zones that's creating this, and then these 2 days right here, 437, 1, 2. That's they got started to get flushed out, but they immediately bought the dip, closed at the highs with the session point of control at the highs Friday. This is setting up technically as a rally out of this consolidation level. So that's how I see it, guys and gals. But yeah, in here, I probably just sit and wait because this week, if we don't have a big move, then it will continue the consolidation of last week, and that was last week's range, essentially. So for now, as long as we're over that, like prior week high. I mean, yeah, this looks like it could continue, but we shall see. Do we want to look at Qs? Let me see. Oh, I got a bunch of questions. Strat lines, auto lines, yeah. NQ lows, yeah. Look at that. Snipe NQ lows today, Sharky. Very cool.
Oh, see, right now we're bouncing off the morning high, the morning.
Yeah, that pre-market high levels. So I think, the Qs this morning, if you're looking at this, early and you're looking at, okay, here's what I mean. In the morning, it looks kind of shaky, right? And then if you're not looking at least like where's the volume from, like where was like prior day highs? We're here. And even if I move this down to a 10 and I probably play this forward, it's getting defended pretty well. Yeah, and the second that you reclaim a pre-market low like this, and then you break through an open or an opening range like this, you break through these two levels, you should be thinking full-blown reversal at that point in time. And then if we're really trending, and this is where if we can trend over yesterday's highs, then yeah, we're going to extend. But until then, we can just be in the chop, right? So upside average weeks range 390 on the Qs. Holy crap. Yeah, we're really far out of that consolidation here. So this is the big one, right? On the Qs. Here's our current consolidation that we're dealing with, right? The prior was all here. So this is now in the rearview mirror, all this. I don't think that we're really going to test this, if that makes sense. I mean, if you get a shot, great, but it doesn't. It looks like that's kind of behind us now, especially if we're trending over this level, over that 375, 374. Yeah, we should be good. And we have this kind of defensive zone that we're looking at right now. Sorry for all the colors and stuff, but so far, this is low, high. Got to break a structure here, right? And we have a continuation higher high here. Nothing but lower highs on the Qs. This is the most recent lowest high. Crazy, man. Are we gonna see? Are we gonna see all-time highs by the end of the year?
I don't know about that.
You know what? I talked about IWM earlier, and if we do, this is the one that has to catch up, right?
Right.
So here, it doesn't have to, but it would be nice to. Where we are right now, and this is what makes me really kind of interested, from a fib perspective, swing low to swing high on IWM, this one is giving you the pullback, right? 50% retracement right here, 618 retracement Friday, right? From the swing low to swing high. This is pretty constructive to me, and it could be the time, right? So if we're looking at, key order blocks and things like that, and I think you probably should. I'm going to remove this dotted line.
Oh, that was beautiful.
Here. Yeah, so like this is the low, this is the key order block, and that is, I'm going to lock this here. Come on. 169 that we're sitting on as we
69?
speak.
What?
So 169, if we can hold that through CPI, and I think all these levels, by the way, if we hold through CPI, that's really what I'm looking for. That's tomorrow. Cool. Are we pulling back? Right to that pre-market level again. Pre-market highs.
I was watching that rejection there. Yeah, let me know. I don't know what they look like because I was looking at it last night. But after you finish your charts, I do have two interesting things on the charts. I do want.
Yeah, you want to try and share really quick?
No, we got to do it before because I don't want. I don't want.
I stopped. You can try it.
Yeah, but I don't want. Let's see.
No.
Oh wait. No.
All right, I'm going here. So this is what I was looking at. So this IWM as we speak right now, super key order block for me. What I was gonna, I have a couple. Sharky, you want to? Which ones were you looking for? And you can walk me through.
Oh, Okay, and I think you can pull up everything on that way. Okay, the two things that were interesting to me on the charts, if you want to go to like a 2 by 2 instead of I do
Sure.
have that drawing set to it can either be side by side or yeah.
What ticker?
I wanted to point out, well, there are two things. One, and since you were kind of talking about the bonds earlier, we can get into that. I was looking at this interesting divergence. If we look at the SPY on the daily, and then we take a look at the HYG. If you notice on the SPY daily, we've made a new higher high on SPY, but yet the HYG has not made that higher high. And I wanted to note this interesting divergence because normally you would want to see these in tandem. So this is one thing that I am watching. I haven't looked at it updated since, like I said, I was looking at it last night. But you would want to see a correlation in this. You would want to see them both making a higher high um, to really kind of, they should be in sync. You shouldn't be seeing this divergence, basically,
Yeah,
in the corporate bonds there,
I hear
and
you.
and in SPY. So I think that is interesting. And the other thing, the other canary in the coal mine that I like to watch is the relationship between the Dow and the transports. And we're getting a very similar situation there between it's a DJI and DJT, where the DJI has made a higher high, and then we have the transports lagging, not making a higher high. So according,
Yeah,
with Dow theory, you would want to see both of these lined up
yeah.
together.
So
Um,
this kind of lines up for the transports. So we talked about the trucking kind of like pullback right now. Was it Yellow something? Yellow, I think was the trucking company that's going bankrupt. Interesting. You know what? Do we have UPS and UPS chart? Wow, does not look good. So UPS did report. That's a miss. FedEx. This is where it's really going to get. FedEx has not reported yet. This is September. So, I mean, this is not till mid-December. That could turn us around. The HYG, I hear you for sure. So that's high yield corporate debt. I feel like, this was my short on the market or hedge on the market, if you will, too, because it doesn't look good. But, GE, Ford specifically with all the UAW stuff, they're a huge issuer of this like ETF's debt, right? And
yeah,
so I think there was a lot of noise, if you will, maybe around like, hey, look, if the UAW strikes like really squeeze Ford, like the debt holders of Ford, they're not going to get saved, right? Like this is corporate debt, right? So like if we're thinking I don't know, like uh, Nike, Target, right? Like a lot of that kind of those companies issuing to AMC, right? Issuing debt like that all goes in here too, right? So I do think for sure this is one thing that this tells me right now is that there's still some weeds that need to get pulled, if you will, in the
right,
market, right?
exactly,
And I think
exactly.
we saw a lot of that, with like, what was it, Paycom, right? And Bill.com, right? There are these are huge gap downs on earnings numbers, right? And they're really not getting
And
saved here,
And
right?
that's what's going on, and I've also been looking at the new highs versus new lows, and
Yeah,
we're getting the same type of situation where we're still not above the zero line on the new high versus new low. So, a
yeah,
lot of this rally has been pushed by the Mag 7, but I'm not really seeing full market participation in this rally.
right.
And although we have, attempted to really make that weekly, what I was really watching was that weekly new swing high, like a new trend on the weekly. But I wanted to give it 1 or 2 days here because how many time, maybe, that even might not be enough time. Of course, you have to trade your plan. But, we've seen something break over a new weekly high. It holds there maybe for 2 days and then it's a false breakout and then it still
Yeah,
pulls down. So I'm going to give it a couple more days, but there are a couple of canary in the coal mines here telling me just still be very cautious. We want to see the new highs versus lows over the zero line, which we have not yet. The same thing for the amount of stocks trading over the 50 and the 200 SMA. I
Right.
noticed on the weekly that for the SPX 200R, which is the 200, the reading of the 200 amount of stocks over the 200, actually pulled back on the week last week, which you wouldn't think to see.
I'm not
Um,
familiar with that one. I know RSP, but
yeah, I don't know the symbol. It's SPX A200R on Thinkorswim. I don't know what the symbol is on.
well, this is an interesting chart too, though, right? Like we could just see this, like so. SPY. Here's the equal weight S&P 500,
Oh yeah,
right?
is that
Or
the
not, not.
RSP?
This is the market cap weight S&P 500.
Oh,
This is
okay.
the equal weight, right? RSP. So these two charts do look. I mean, they look totally different, right? Like this one
Yeah,
looks like it's ready for breakouts, and this one
right.
looks like possibly breakdowns. So I think this is saying the same thing. And it goes back to my IWM, right? Like this is where it's going to show up, right? If this guy holds, right, this would be a huge recovery, no question. But what's holding us, right? Like it's very crystal clear, right? If you haven't seen the weekly chart of Microsoft, right?
Right,
We're
and that
talking
was a
about this
great,
like phenomenal.
that was a great move on Microsoft. One of the ones we did go over,
Yeah,
and we did, it was it was a little tricky because of where we were, but it certainly played
yeah.
out. But you were screaming the long trade on Microsoft. So great
And we're
call on
still here, right? So we haven't like we're basically on it, but what I say is this is the same thing, right? Like it's so tough to one go long, right? Stocks that are just like at all-time highs, right? It's also hard to go short, right? At some of these. So and I took a short, which immediately was invalidated like quickly. And I think it was on not Friday, but it was Thursday off this kind of starting candle, and it was quickly bought up. There are things that, in the market for sure, this looks like a breakout, right? But, trying to trade something like this is a bit wild, right? Um, you'll know it. It's more of an intraday kind of setup for me. Can I look at monthly charts of what Tesla? Yeah. So Tesla's a great example. So head and shoulders. Look, I'm not live on edge. I'm not a pattern trader. I know the patterns. I know what they are, right? And what I am is, Sharky talked about Dow theory. I talk about Wyckoff a lot.
Oh
If you
yeah,
don't know those
send me
two
some
things, that's
Wi-Fi.
where all patterns came from. So if you were going to study anything, Dow theory, Wyckoff, like why not go to the originals? But even on a 30-minute chart, right? Like this whole section here is accumulation, right? This entire, and we were talking with TrendSpider the other day. This entire 22 something day base does look very, it looks like accumulation, right? It's 25 days. So it's what's true at the very minimum is that if it can't go lower, it's got to go higher, right? I mean, that's kind of fact. And what we have right now on Tesla is a very, the ICT SMC people like call these fair value gaps, originally called like a low volume pocket. Um,
Is
yeah, between 234 and 228, we do have currently a massive low volume pocket or fair value that needs to be filled on the chart, right? And so I do think that this looks like, yeah, it looks like something like this right now, and then see where it goes, right? Because it could do a whole nother thing, right? I don't know, right? That it could easily do that. It could easily just as easily do that, right? So, but right now this looks like, and that's an investing thing. If you're talking about like, long term, you just kind of like believe in it. Nothing's fundamentally changed in this story. If you've been invested in Tesla for a while, just the talking heads have changed. But yeah, like right now we're coming back and we're retesting not Friday, but Thursday's open, right? So I would say is if long as we can hold that 220 right here, I do think that we should fill this 235, and it might happen this week, right? But your head and shoulders traders, your neckline, I guess, would be looks like about that same 220 kind of level. But if you took the breakout, right, like you're kind of you're probably in a heavy drawdown right now, unless you had a day trading system. But yeah, you need to see this base and hold, right? For sure. And then you could get your extension. And then, if you're really measuring it, do I want to go there? Do we want to go there, Sharky? I don't know. If you're really measuring, it does only take you to that 235 level, right? That's how you'd measure a move on something like that. So that's what we're looking at, right? So yes, right, 235, that does look like target to me, as long as we're holding over, some of these key levels. And again, back to Tuesday, that's going to be the big day. Tuesday's the big day. A couple of charts. Let's hit the Mag 7. Here's Meta on a daily time frame. She's looking bulled up. She's looking pretty bulled up to me. Sorry for scrolling around. I'm usually pretty quick with this stuff. But what I'd say here is be careful. We have a little bit extension, but I'm going to go ahead and take this and take that. So we're as long as we're riding along this level, she looks good, right? Do I want to press these bet? Not necessarily. This is why I'm saying be careful, right? If we see a little extension, boom, boom, that's going to be really good. Earnings not till the end of December, so that's well out of the way. I think you're free and clear. Really, this is kind of like that prior consolidation that it's really battling with. Is super constructive. I took a couple shots on this last week, by the way, and got chopped out. I would say, look, this is one that you probably want to be a little bit more patient with. And I'm going to try and find a fixed range volume profile. So 2 areas here. Number 1, so from here to here, where's my volume profile that's sitting at 324? And then if I extend this over to here, this is going to be 330. And that's that big volume shelf that we see right there. So 330 is going to be your key level. I think we're running up right onto it. If we get this close, above this is going to be a battleground for a bit. Expect a bit of a chop, but yeah, this is one where I'd rather be an investor right now, maybe, because this kind of setup could take a while to play out, but this looks like the impulse moves are going to be hot and heavy, and I will be a trader on a lot of those for sure. Next one, I want to look at Netflix. So similar kind of setup, right? So we have these things, and we looked at one last week. We looked at Boeing, right? So we have, a broadening range to the downside and to the upside after this big old consolidation. We still have some of this, right? Like right now, I'm not taking that wick. I could take this guy. So here's the broadening range, Netflix extension down below. Big gap up on earnings. We are back inside reclaiming right at a very critical level too. So all of this said, this chart looks super constructive. If I was in charge of the Mag 7, I'd probably put Netflix right in there. And as long as we're holding over this like mid pivot of this consolidation, which is going to be 435 right there, I think that she should break, right? So 435, call it for your midline on something like that. She should, when I say break, go test the highs of that broadening formation. All right. Same thing, very similar setup, right? We had on Boeing. Just a quick update. So this is a long from an equity position. I didn't grab the long overnight over the weekend swing, unfortunately. Cautious here, right? So we're again back to that. This lined up on a lot of different levels, right? But from a retracement, broadening range, a lot of confluence here. Where we are right now is we're right back into this 213 is going to be that center line on that prior consolidation for Boeing. So just be aware that is going to be a big overhead supply. Call it 210. I'm not going to press this bet unless we're significantly over that, and then we can see the top of that broadening formation. Cool. That's what I got for right now. Squid Game 2. Ooh, Squid Game 2. Ken, bullish Netflix. Yes. Okay, I'll do one. Volk, Apple. Yes. Apple is, she wasn't really playing today, but here are all my trades on Apple. Looks like everybody plays out. What I really wanted on Apple, sorry, there's so many lines on my Apple chart. What's
Same
going
thing
on?
Doesn't want to give up 440.
Yeah, so Apple, we have this prior downtrend, And when this was, I think, not that long ago, but we charted this out. This was a post earnings move. So we hit this, pull back, and post earnings, once we consolidated over that 170 or that downtrend, this is a new trend, we're uptrend. If, I'm not going to get into fundamentals or anything. I think this fair value got filled. This is pretty close, 187.60. Here's your real setup that we're currently sitting in. We are over this downtrend. So for now, that's what you should be thinking. I see. So this is very much like still, a lot of these broadening formations are setting up, and if you don't know how to draw them, you just essentially look for like an area of consolidation. Something like this, and then you get that type of setup. And if you tag the lows of this broadening formation, look, it's likely that we go straight back up to the top. But when we're trading, we think of level to level. We don't think of like, oh, breakout to all-time high. That doesn't happen usually. So here, boom, boom, and you're getting it. What Apple's doing right now is kind of interesting to me. Even if I took just these last two, and I think that's more appropriate, right? So if you take these last two, if it holds over this 185, when you break a level like this, you can continue higher. You really can, and that's how these become like serious things. It's not going to be unless we're trending lower, and I would use as my key pivot 182.90 as my key pivot for any like stop or potential short hedge trade on Apple, and that's going to pull back all the way to December 2021, prior all-time high. So that is always going to be a very key level on Apple. It's how it acts when we get above it. If we come back down and retest it and hold, I'd be long. But I'm not really going to go short unless we're like pressing below that, right? And that's when this lower broadening formation will come into play, and we may actually get that retest down 160. But until then, it's not ready for a short, but it looks like a constructive long. New money long, though, not so much. It's not going to, I don't think it's going to get away from you on this one. It's tough. You would have to go level to level. All right, guys, that is a lot. Ken wants to do SoFi. Yeah, I actually bought SoFi. So I did buy SoFi yesterday with you, Ken. I love the spot. I think this is, something that's not really talked about. We'll see, right? Technically speaking, so the earnings kind of flush out. I like the level. I like the level a lot from a technical perspective. Is it in a new uptrend? No, not yet, right? But it's not going down here. And as long as this holds, specifically that 677 for sure. I know you got that level. It's a good spot, right? To take a shot. And yeah, it makes some big moves sometimes. So 618 retrace, 65, sorry, at 675. So we go level over 722. We should see $8, man. Here's hoping. But anyways, cool. All right, guys, I appreciate you. That's what I got for now. And I think we're good to go.
Oh yeah. I think we did.
I think we did it. Cool. We good? Yes.
All right. Well, thanks so much for having me. Really appreciate it. I always enjoy going over the market, getting prepped up for the week ahead. Always having a good game plan and some great data points, and we'll see. It should be an interesting week.
Ripper, by the way.
Yeah, let's see how these divergences play. Let's see what we get tomorrow. It's it's tough, obviously, making too many predictions coming ahead of CPI, but we'll trade our levels and try to keep our bias at the door. And, for sure. Let's be safe.
Yep. Trade safe, guys. Love ya. Adios. Peace.